So we are going to start audit revisionary series. In that we are going to start with essay 560 subsequent event. This is going to revise, and in that first this revisionary series you can watch it at 2x speed. And second disclosure I want to make is that I'll explain you first the meaning of the subsequent event. For example, as we all know that financial year start from 1st April and it end on 31st March. So this is the financial statement date, okay? Date of the financial statement. And if annual general meeting is going to be conducted on 30th September, AGM is conducted, in which financial statement will be issued to shareholders, right? And in between, audit report date is on 31st August, let's say. Now you will understand easily, you will understand the definition of the subsequent event. So the definition of the subsequent events occurring between the date of the financial statement and the date of the auditor's report. Date of the financial statement and date of the auditor's report. It means from 31st March to 31st August. This is only for example. It is not necessary that audit report is issued on 31st August only. You all know that, right? Fact that become known to auditor after the date of the auditor's report. In that there is a two category. First is before issue of financial statement and after issue of financial statement. So before issue of financial statement, it means before 30th September, and if the fact is known after 30th September, what will be the consequences and how the auditor going to deal with those events. Now we'll start with the objective of the auditor regarding the essay 560 subsequent event. Objective is to obtain sufficient appropriate audit evidence about whether the event occurring between the date of the financial statement and the date of the auditor's report that required adjustment or disclosure in the financial statement are appropriately reflected in those financial statement as per applicable financial reporting framework. Okay, and respond. First is to obtain sufficient appropriate audit evidence about those events, and the next objective is to respond appropriately to the fact that become known to the auditor after the date of the auditor's report, that had they been known to the auditor at that date may have caused the auditor to amend the auditor's report. As I have explained above, this will be treated as a category 1, category 2 and category 3. Events occurring between the date of the financial statement and the date of the audit report, category 1. Obtain sufficient appropriate audit evidence about whether events occurring between the date of the financial statement and the date of the auditor's report that required adjustment or disclosure in the financial statement are appropriately reflected in those financial statement as per applicable financial reporting framework. Procedure is, this is just a memory technique. Subsequent interim financial statement to be read, understand. This is the procedure which we are going to revise. As subsequent interim financial statement to be read, you understand the procedure established by the management to identify the subsequent event. Minutes of the meeting held after the date of the financial statement inquire inquiries of management whether the subsequent event have been occurred that require adjustment or disclosure in the financial statement. Adjustment, whether the subsequent event that required adjustment disclosure have been adjusted disclosed in financial statement accordingly and in writing. A written representation by a management written representation by the management that all the subsequent events that required the adjustment or disclosure have been actually adjusted or disclosed in the financial statement. So this was the procedure which need to be applied. Okay. The next is, if the fact that become known to the auditor after the date of the auditor's report, but before issuing the financial statement, then in that management amend the financial statement and restrict it only to the extent of the effect of a subsequent event. Extend the audit procedure to the date of the new auditor report and provide a new auditor's report on the amended financial statement. Management amend the financial statement and does not restrict its approval to the extent of the effect of a subsequent event. Auditor is permitted to restrict the procedure only on the subsequent event to that amendment. However, auditor can use one of the following options to revise the audit report and include this clarification in the revised audit report. First is amend the auditor's report to include an additional date restricted to that amendment, dual dating, original date of signing plus additional date with reference to the notes of account, or provide a new or amended auditor's report that includes a statement in emphasis of matter paragraph or other matter paragraph stating that the auditor's procedure on subsequent events are restricted solely to the amendment of the financial statement. And if management not amend the financial statement but auditor believe it should be amended, this is the third situation. Then if the audit report not yet given to the entity, then modify the opinion as per SA 705. And if the auditor's report given to the entity, then inform the management not to issue such report to the third party. If it still issued, then take appropriate actions. All right. And in category 3, that fact become known to the auditor after the date of the audit report and after issuing the financial statement, which means after 30th September. In all this case, this was happening before 30th September. It means before issuing the financial statement in AGM. This is the common theory for category 2 and category 3, that the auditor has no obligation to perform any audit procedure regarding such financial statement. However, if a fact that become known to the auditor that had been known to the auditor at the date of the auditor's report may have caused the auditor to amend the auditor's report, the auditor shall discuss the matter with the management and where appropriate TCWG, those charged with governance, determine whether the financial statement need amendment, and if so, inquire how management intend to address the matter in the financial statement. All right, this is the common theory for both the situation, and then further act on the below situation which we are going to revise. So after issuing financial statement, what will happen? Management amend the financial statement and restricted only to the extent of the effect of a subsequent event. So it will be same as extend the audit procedure so that the date of the new auditor's report and provide a new auditor's report on the amended financial statement. And management amend the financial statement and does not restrict its approval to the extent of the effect of the subsequent event. The same, auditor is permitted to restrict the procedure only on the subsequent event to that amendment. However, auditor can use one of the following option to revise the audit report and include this clarification in the revised audit report, both the conditions. And the third is, if management does not amend the financial statement but auditor believe it should be amended, then auditor can take appropriate action. And in this both the situation additionally include an emphasis of meta paragraph or other meta paragraph to explain the amendment in the financial statement and amendment in the audit report. Review the steps taken by the management to ensure that anyone in the receipt of the previous audit report has been informed about the situation. So here the essay 560 got completed. Now we'll move next to essay 570, going concern. Auditor shall obtain sufficient appropriate audit evidence whether a material uncertainty exists in relation to the events or a condition that casts a significant doubt over the entity's ability to continue as a going concern. The first part is risk assessment procedure. Consider whether the events or a condition exists that may cast a significant doubt on the entity's ability to continue as a going concern. Determine whether management has already performed a preliminary assessment of the entity's ability to continue as a going concern. If such assessment has been performed, then inquire whether management has identified the events or condition that can cast a significant doubt on over the entity's ability to continue as a going concern. And if such an assessment has not been performed, then inquire on what basis management is applying a going concern basis of the accounting. This will be the part of the risk assessment procedure. Then the further audit procedure. The auditor shall evaluate the management assessment of the entity's ability to continue as a going concern. Following matters should be considered. This will be the memory technique. Complete period beyond future forecast fact to be written. Period covered. Cover the same period as that used by the management to make its assessment as required by the applicable financial reporting framework. It means not less than 12 months from the date of the balance sheet date. Completeness. Whether it includes all the relevant information known to the auditor. Period beyond the management's assessment. Whether there are events or conditions beyond the period of the management's assessment that can create a material uncertainty over going concern. Management's plan for a future action. Whether the outcome of this plan can improve the situation. And evaluation of the cash flow forecast. Evaluating the reliability of the supporting data and whether the assumptions are reasonable. Additional fact post assessment. Whether there is any need to reassess the entity's ability to continue as a going concern. And written representation. Requesting a written representation from the management and when appropriate those charged with governance regarding their plans for the future actions and feasibility of this plan. Now, what will be the indicators of the material uncertainty? There are three indicators. First is a financial indicator, second is a operating indicator, and the third is the other indicator. Financial indicator. Net liability or net current liability position. Fixed term borrowing approaching the maturity without realistic prospect of the renewal or repayment, or excessive reliance on short term borrowing to finance the long term asset. Indication of withdrawal of the financial support by the creditor. Negative operating cash flows indicated by a historical or a prospective financial statement. Adverse key financial ratios. Substantial operating losses or a significant deterioration in the value of the asset used to generate the cash flows. Arrears or discontinuation of the dividend. Inability to pay the creditor on due dates. Inability to comply with the terms of the loan agreement. Change from the credit to cash on delivery transaction with the suppliers. And inability to obtain the financing for essential new product development, or other essential investment. These all are the financial indicator which indicate the material uncertainty existence. The next is the operating indicator, that are management intentions to liquidate the entity or to cease the operation, loss of key management without a replacement, loss of a major market, key customers, franchisee license or a principal supplier, labor difficulties, shortage of the important supplies, and emergence of the highly successful competitors. These all are the operating indicator for material uncertainty. And other indicators are non-compliance with the capital or other statutory or a regulatory requirement, such as a solvency or liquidity requirement for a financial institution, pending legal or a regulatory proceeding against the entity that may, if successful, result in claims that the entity is unlikely to be able to satisfy. Changes in the law or regulation or government policy expected to adversely affect the entity, and uninsured or underinsured catastrophes when they occur. This all are the other indicators which shows the material uncertainty. Now the conclusion is, use of going concern basis of the accounting is appropriate, but material uncertainty exists. Management need to provide adequate disclosure in a financial statement. Adequate disclosure of the material uncertainty is not made in financial statement. Express a qualified opinion or adverse opinion as appropriate in accordance with the SA 705, and in the basis for a qualified adverse opinion section of the auditor's report state that a material uncertainty exists that may cast a significant doubt on the entity's ability to continue as a going concern, and that the financial statement do not adequately disclose this matter. And the other is, adequate disclosure of the material uncertainty is made in the financial statement. The auditor shall express an unmodified opinion, and the auditor's report shall include a separate section under the heading material uncertainty related to going concern. Draw attention to the note in the financial statement that discloses such matter, and state that this event or a condition indicate that a material uncertainty exists that may cast a significant doubt on the entity's ability to continue as a going concern, and that the auditor's opinion is not modified in the respect of the matter. The other part is, use of going concern basis of the accounting is inappropriate. Management need to prepare liquidation account. If the financial statement have been prepared using the going concern basis of the accounting, but in auditor's judgment, management's use of going concern basis of the accounting in the preparation of the financial statement is inappropriate, the auditor shall express an adverse opinion. And if the financial statement are prepared on acceptable basis, it means on a liquidation basis, then the auditor may able to express an unmodified opinion, but may consider it appropriate or necessary to include an emphasis of matter paragraph in accordance with the SA 706. Disclosure to be given when the auditor conclude that the management use of going concern basis of accounting is appropriate in the circumstances, but a material uncertainty exists. Then adequately disclose the principal event or a condition that may cast a significant doubt on the entity's ability to continue as a going concern, and management plan to deal with this event or condition, and disclose clearly that there is a material uncertainty related to the event or condition that may cast a significant doubt on the entity's ability to continue as a going concern, and therefore that it may be unable to realize its asset and discharge its liability in the normal course of the business. So here we have thoroughly revised SA 560 and SA 570.